Hey TSW Forex, welcome to another episode. I know you guys have been waiting for this one. As promised, we went ahead and we edited information, we organized it, and we placed everything in order so that you guys can have sequential and very useful information to use as it relates to Forex. I don't want anything to be, too complicated. So we simplified it, we simplified the information, and we're going to use that now to educate as much persons as possible. If you're new to the channel, please feel free to subscribe. And if you're already subscribed, thank you for following. Thank you for using that notification bell to be notified when we upload. Now, we're going to jump straight into it. So the TSW Forex free course, phase 1, we have 3 phases of the course. Phase 2 and phase 3, that is not available as yet, but phase 1 will be free to you guys. So let's get straight into it. Table of content. Now, in the table of content, this is just to give a guide as it relates to how the course is organized, and of course, I want you guys to take note of this. So the table of content. The introduction, that's the first thing. We're going to give an introduction as to what the course is about, and then chapter 1. So in chapter 1, this is what you're supposed to expect. What is Forex? We're going to discuss what is Forex. So of course, this is what we want to do in this video, because of course we're going to touch chapter 1, what is Forex, then Forex versus stock. We're going to have a comparison, and then we're going to compare them together, the Forex versus the stock market. So that's the second thing that we're going to discuss. And the third thing that we're going to discuss is trading sessions. So everything as it relates to Forex, stocks, and the trading session will be discussed in chapter 1. In chapter 2, Forex terms. Now there's a lot of terms to be known. So you have to know the terms. That is a language of how we communicate in Forex. If you're in France, you must know how to speak French. So whenever I'm using certain terms, I expect you guys to know what they mean. This is what chapter 2 is about. Getting you familiar with the type of words and information that we have in Forex. In chapter 3, we're going to touch on currency pairs and commodities. Now, of course, you will know what they are. If you already know what they are, then fine. Then in chapter 3, we're going to discuss currency pairs and commodities. And of course, this currency pairs that you see here, I was going to talk about the majors, the types of currency pairs. So that's the second thing we're going to discuss in chapter 3, the types of currency pairs. In chapter 4, we're going to touch on broker and trading platforms. Now, a lot of persons have this, they have this misinformation about what a broker is and a trading platform. So we're going to give clarity on the types of brokers and different brokers that you can join and the trading platforms to which you can use to trade. In chapter 5, types of analysis. Now, as you can see, the more chapters we're going down into, is the more stronger the information is going to be, and the more important the information is going to be. So the types of analysis, that is very important. You cannot trade unless you do proper analysis. Would that be the different? We're not going to discuss that. So whenever we reach at types of analysis, you know the types of analysis, the types of charts. Another important thing. Chapter 6, we're going to discuss candlesticks, and of being specific is Japanese candlesticks. In chapter 7, we're going to discuss support and resistance levels. So as you can see, we're going to discuss the charts and then touch support and resistance levels. Fibonacci levels. And both of them work together. But we're going to discuss that when the time comes. I hope that you guys are looking forward for this type of information. Types of trends. Trend identification. You must be able to identify the trend of the market. The trend is your friend. And we're going to discuss trend lines. In chapter 8, chart patterns. So as you can see, we have already touched what the trend is. and then we're going to go into more advanced level things. So make sure you have the information from chapter 1 pat, so that by the time we reach at chapter 8, nothing is foreign to you. In chapter 9, we're going to touch on the types of traders. Introduction. Alright, this course seeks to enlighten and teach about Forex in a structured and organized set of content in such a way that is easy to learn and informative as possible. It is geared towards beginners and intermediate level traders. It is advised that all viewers of this course have a book, or you can have a notebook or a notepad to write information and draw when necessary for information retention. Alright, so let's jump straight into chapter 1. And of course, we're going to touch what is Forex, Forex versus stocks, and trading sessions. What is Forex? So Forex stands for foreign exchange, sometimes abbreviated as FX. It is the world's most traded market. It is a decentralized market where world currencies are traded. The supply and demand of these currencies fluctuate, and thus the price. So of course, whenever something the demand for something is in high, of course we're gonna see the price go up. If the demand is low, same. If the supply is large, price is gonna go down. If supply is low, price is gonna go up. So they work hand in hand. Of course, a lot of you already know that, but just to clarify. Alright, so CFDs. What is CFDs? CFD stands for contract for difference. So in Forex, it's not really treated, what we call Forex is not really foreign exchange only. It's just a subsidiary of what is really CFDs, which we call contract for difference. And under contract for differences, our CFDs, we have shares, which you can trade, commodities that you can trade, indices that you can trade, foreign exchange, and treasuries. So there are 5 main categories under which the CFD allows you to trade. So whenever someone speaks of the Forex market, when you join a broker, the only thing most persons highlight is Forex or the foreign exchange market. But under a brokerage firm that or a broker that you join, you are able to trade shares, commodities, indices, and treasuries. Okay, so we're going to discuss the difference or a comparison of the stock market versus the Forex market. Okay, so now the first difference is there's a large volume, around 6.6 trillion per day in the Forex market. And in the stock market, compared to them, they have a peak of 200 billion per day. So clearly we can see the winner here. 200 billion, it takes 1,000 billion to make 1 trillion. And the stock market is 6.6 trillion. So that in itself should tell you how big or how large the stock market is. The second thing is Forex has a wide focus. It used to be narrow. I'll explain. You could only trade back then with a few pairs, which were they call the major pairs. So only the big ballers or the top 8 traded currencies in the world were the only currencies coming together against each other. So one currency versus the other is the only one that we could have traded back then, unfortunately. But now we have a wide range. We have minors now, and we have exotics. So we have a lot of them that we can trade now. But back then it was a very narrow focus. Now, compared to the stock market, you have a wide focus, which means there's a large amount of stocks that you can buy, a large amount of number of stocks that you can trade from. Forex market is 24 hours a day. The stock market is only 8 hours a day, 3 times more. So you can see that the Forex market is already leading. In Forex, there's a minimal to no commission. So the brokers are the persons who you join to do the trade. They have to make money. But the amount of traders that are present at any given time, you can see that if you take small amount of money from 1 million people, you still will get 1 million. But if you have like 200,000 people, you're going to charge more, of course, right? So in stock market, they do charge a commission. All right, so you have high liquidity. What is liquidity? Liquidity is just basically talking about the number of buyers or sellers that are present at any given time. So Forex has high liquidity and stock market has less liquidity. Now, let's look at a graphical comparison between the largest stock markets in the world and Forex market. The Forex market is 6.6 trillion, and look at that towering right over everything else. The New York Stock Exchange, the largest stock exchange in the world, has only 22.4 billion. Tokyo Stock Exchange in second, 18.9 billion. The London Stock Exchange third, 7.2 billion. So you can see the big difference between the Forex market and the stock market across the world. Okay, so this is a graphical representation of the data as well. And you can see that Forex is by far the largest out of all of them compared. So Forex market is already in the lead. Now, why is Forex 24 hours? Forex is 24 hours because each country across the world trades for 8 hours. So as the sun moves to the west, each country trading hours closes. But while their trading hours is closing, another country trading hours starts. And this is why the Forex market is 24 hours. Let's explain. So at midnight, we have Sydney session closing at 1. At 2, we have the Tokyo session, which is in session taking place, with the Sydney session at midnight. So both of them are on at midnight, and you can see at 1 the Sydney session closes. Tokyo session is taking place at 2, while the Tokyo session is about to close at 3. The London session takes place and this is in Jamaican time, so -5 GMT. And then when the London session here starts at 3, it continues all the way up to 7, where the New York session takes place. And the New York session starts basically almost half where the London session started. And by the time the London session closes at 10, the New York session is already taking place here. So the New York session now closes at 5, or should I say 1500, 1600 hours, which is 4 p.m. in the evening. And by the time the New York session closes, guess what? Sydney session starts. So you can see that there's no space in between the sessions. London session takes place, New York session takes place, Sydney session takes place, Tokyo sessions takes place. There's not 1 hour where there's not a session taking place. And this is the reason why the Forex market is 24 hours. So the New York Stock Exchange would last 8 hours, and the London Stock Exchange would have lasted for 8 hours, but at the same time they don't trade the same stocks. And that is the big difference between the Forex and the stock market. It is international and worldwide, and this is the reason why it is 24 hours. So of course, this is for 5 days of the week. So the trading sessions last for 5 days of the week, from Sunday to Friday evening. So it starts at 5 p.m. depending on the daylight saving time, or 4 p.m. Sunday evening, all the way up to Friday 5 p.m. or 4 p.m. depending on daylight saving time. So that is it for trading sessions. So the trading sessions last for 5 days. So you can only trade Forex 5 days a week. It starts from Sunday evening to Friday evening, either 4 p.m. or 5 p.m. depending on daylight saving time, to 4 p.m. or 5 p.m. on a Friday. So that's 5 days of the week. And that is it for chapter 1. Thank you for watching TSW Forex, and I hope that you guys found this educational. Subscribe, turn that notification bell on. Of course, in the next chapter, you know that we're going to discuss Forex terms. Thank you for watching.